You're getting robbed. $1,600 a year by your car insurance company. I'm Yash, and I just cut my insurance bill from $2,400 to $840. Same coverage, same car, one Sunday afternoon. In the next 6 minutes, I'm showing you the exact 5 moves I used. Stop number 5 is going to make you angry you didn't know this sooner. I'm breaking these down in order, but comment below which one you're trying first. Let's go. Your bill went up again, and you probably thought everyone's rates are going up, right? Wrong. Car insurance jumped 36% since 2020. The average American now pays $2,300 a year, but USAA customers, $1,400. Travelers, $1,600. Geico, $1,731. Same coverage, different company, $1,000 difference just because of the logo on the card. So where does that $1,600 in overpayment come from? The gap between the cheapest insurer and the national average is over $1,000. Add in missed discounts, bundling alone saves $466 a year, and suddenly $1,600 is actually conservative. You're not overpaying, you're funding their profit margins. Here's how to stop it. Stop number 1, the 15-minute audit that saves you hundreds right now. Most people set their policy once and never look at it again. That's insane. Your kid who is on your policy at 17, they're 29 now with their own insurance, but you're still paying for them. You moved to a safer neighborhood 3 years ago, didn't tell your insurer, still paying the old rate. You sold your second car, still paying collision on it.
Insurance companies don't send reminders. They don't say, hey, you might be overpaying. They just keep cashing your checks. Here's something most people have never heard of: the 100,000-mile rule. Once your car crosses 100,000 miles, do the math. If the maximum payout from collision and comprehensive is less than what you're paying annually for that coverage, you're literally burning money. You're insuring an asset worth less than the insurance costs. That's backwards. Then there are redundant add-ons. You have AAA? Why are you paying for roadside assistance through insurance? Second car? Why are you paying for rental reimbursement? Credit card covers rentals? Same thing. You're paying twice for the same protection. Here's what you do tonight. Pull up your declarations page. That's the document listing everything you're paying for. Go line by line. Ask yourself, do I actually need this? Am I paying for this somewhere else? Delete the redundancies. 15 minutes, couple $100 saved, minimum. If you're still watching, you're already ahead of 70% of people. Drop a like so I know you're getting value. Stop number 2, the discount stack. This is where it gets stupid. Insurance companies offer discounts most people don't even know exist, and they're not telling you. Why? Because every discount you don't claim is profit they keep. Let me stack the big ones with actual numbers. Bundling home and auto, $466 a year, 14% off just for having both policies together. Good driver discount, up to 30%. No accident or ticket in 3 years? You should be getting this. Group or affiliation discounts, alumni associations, professional organizations, credit unions, up to 20% off. Most people have no idea this exists. Pay in full discount, 10% just for paying up front instead of monthly. You're getting paid to avoid installment fees. Low mileage discount. Under 7,500 miles a year, 20% saved. With remote work, this is huge. And here's the one nobody talks about: defensive driving courses. 2-hour online course, free or under $50, gets you a discount for 3 years. Easiest return on investment you'll ever see. Here's your move. Call your insurer tomorrow and ask them this exact question. What discounts am I not currently getting? That one sentence can save you hundreds. I did this myself. Found out I'd been eligible for a professional affiliation discount since college. $340. One phone call. Stop number 3, shopping around. Here's the psychology. 58% of people know they're overpaying, but only 29% actually switch. That gap? That's where insurance companies make their money. They're betting on your inertia. Your rates creep up every year, 10% here, 8% there. You don't notice because it's spread across 12 months. But over 5 years, you're paying 40% more than when you started. Switching is free. Getting quotes is free. 20 minutes. You're not locked in. There's literally no downside except the time it takes to click a few buttons. Use a comparison tool, the Zebra, Insurify, Policy Genius. Get at least 3 quotes. Make sure you're comparing the same coverage levels and deductibles. Apples to apples. You might switch today. You might save $1,000 this year. Stop number 4, the credit score hack.
This one sounds weird, but it's one of the most underrated levers you can pull. In most states, insurers use something called a credit-based insurance score to set your rate, and the impact is massive. Excellent credit, $120 a month. Poor credit, $313 a month. That's a $2,300 swing per year just because of credit. Most people have no idea credit affects car insurance. They think it's just driving record, age, zip code, but your credit is baked into the algorithm. Improving your credit score is one of the highest ROI moves you can make, and it compounds across every loan, every insurance policy, every financial product you'll ever use. So here's what you do. Check your credit, dispute errors, pay down revolving balances. Even small improvements can drop your insurance rate. Going from fair credit to good credit can save you over $1,000 a year on insurance alone. The last stop is coming up, and it's the nuclear option. Hit subscribe so you don't miss the next money-saving breakdown. Okay, stop number 5, the move almost nobody knows about. This is the payoff, the biggest, most underutilized hack on this entire list. Telematics, usage-based insurance. Here's what it is. Programs like Progressive Snapshot, Allstate DriveWise, State Farm Drive Save and Save, Nationwide Smart Ride. They track your actual driving, speed, braking, mileage, time of day, either through a phone app or a device you plug into your car. If you drive safely and don't drive much, you're priced on your actual risk, not the national average. You're not subsidizing the guy who drives 25,000 miles a year with 3 speeding tickets. The numbers are insane. Drivers can save 25 to 40% on premiums. Nationwide Smart Miles saves low-mileage drivers an average of 33%. Safe drivers can save up to 40% with Smart Ride. And you get a 15% discount just for enrolling in most states. 15% just for signing up before you even start driving. Here's why insurance companies hate that I'm telling you this. Only 13% of drivers use it because they literally hide it from you. Why? Because the people who do use it save an average of $900 a year. That's money they want to keep. Now, real talk, this works best for safe, low-mileage drivers. If that's you, it's a game changer. If you've got a heavy foot, if you're slamming brakes constantly, if you're driving at 2 a.m. every night, maybe skip this one. But if you drive under 10,000 miles a year and have a clean record, sign up. It's free. It's opt-in. Worst case, you don't get a discount and you opt out. Best case, you save 40%. That's over $900 a year. Let me recap. 5 moves: policy audit, discount stack, shop around, fix your credit, telematics. Do even 2 of these, you're saving hundreds. Do all 5, you're hitting that full $1,600 I mentioned at the start. Every dollar you overpay on car insurance is a dollar not building wealth, not in your emergency fund, not compounding. The insurance company doesn't care about your financial future. You have to. Here's what you do right now. Pick one, just one. Policy audit takes 15 minutes. Calling for discounts takes 10. Getting 3 quotes takes 20. Start somewhere, because doing nothing costs you $1,600 a year. If this just saved you even $200, hit that subscribe button. I'm Yash, and I keep bringing you these breakdowns, real, actionable stuff that puts money back in your pocket. Links in the description for the tools I mentioned. Go get your money back. Which stop are you doing first? Comment 1 for the audit, 5 for telematics. I'm curious what hits different for you. I'll catch you in the next one.